Robert, same Robert who had asked earlier about income method number 2 a little bit. He says, I've downloaded a list in a PowerUp. I'm doing a naked put search. Is there a way to exclude any stock on the list with upcoming earnings? Oh, absolutely. So what Robert's talking about is we create a search for positions that we want to see. Okay, we set our time frame. Let's see. I don't think I have any good lists here. By the way, we'll just use this IBD 50 and weekly combined list, and I have 57 results. Okay, so what you're going to do now, Robert, is not just against your list. You're going to create a search against your list. So here's the list. I'm going to keep this list that I have. I'm going to go to fundamentals. We're just going to check not between now and expiration. Okay, so in the fundamentals, we have earnings date and ex-dividend date. We're checking not between now and expiration for the earnings date. Remember, we had 57 total results for naked put default screen. This took it down to 18 because we're in that earnings cycle and also because we're looking to February, which is 42 days away. Now, you're screening against your list in this naked put screen, Robert. You've checked the box. So now what I'll do is save this, and I'll call it my list, my stock list, sell puts with no earnings. Okay. So now, anytime I pull up this search, it's saving my defined search with my criteria, my created list that I wanted, and always avoiding positions that have an earnings between now and expiration date. Simple as can be. Check the box, resave the search, and you are all set as well. Okay. Alberto, though, just recently asked, what do you make about the voices about a new stimulus coming up under the Biden administration? How could this influence married put performance? Well, the market is still showing us it wants to go up. And we had a hiccup today, but I mean, the hiccup was expected, as a matter of fact. Again, I don't want to say expected, but where are we today? Did it change? No, it didn't. We're in a bearish sell. And what have I always told you guys? 2 bearish sells in a row. Yesterday and today, we had that webinar last week about the market sentiment tool. I've seen 2 bearish sells. I'm not saying this is related to that. I'm not saying this is related to any planned policies. What I'm saying it's related to is we're at a peak or near a peak of stocks hitting their new 52-week high versus the new 52-week low. The percentage of stocks that are over their 20-day moving average. The gap over the SMA 20 for SPX, when we see it get into this range, it very rarely continues up for a higher gap, so that usually means you see a little retracement here. And all the histograms are very similar. Look at where we are. The number of days the SPX is up. Historically, over many years, we typically don't see it go into these higher ranges. There's usually a drawback in this case. That's what we expect to see. Good news comes out, some fantastic news comes out. Hey, for whatever reason, Tuesday, should be so lucky, but let's just say Tuesday, news comes out that, hey, the coronavirus did just stop. It's not going to, but let's say that it did. A market's going to go exact opposite of what we think is going to happen, and exact opposite of what we've seen in historical trends, okay? Something I've been paying attention. So here's the other one. The gap over the SMA 100 and the percentage of stocks over their SMA 100, they're all in that extreme of their histograms where they tend not to go further. And how do you get back to the norm of stocks over their SMA 100? The gap over the SMA, well, it retraces. It pulls back, okay? So to your question directly, I don't know if it's going to affect the married put positions provided that we're still looking for the right types of stocks, okay? That we're looking for that as well. We're looking for the right stocks. We're looking for the growth stocks and the stocks that do grow. Not every stock grows. I'm in that one with AEM right now that is not growing. And right when I think it's growing and it's time to roll down my put and lower my cost basis on that position, it falls, it comes up 6 points and then it falls 4. So I'm back to where I was the day before. Some things are changing. You've probably already seen it. It's not a big move, but it's a big enough move percentage-wise. The home rates did go back up in the last 3 days. Once it was announced that the Ossoff and Warnock won, of course, the Georgia runoffs, market tends to hesitate. Treasury yields tend to hesitate and to go in a different direction when the Congress, House, and the White House are all the same party. Doesn't matter if it's Republican or Democrat. Okay, that means that there's going to be a very hard balance of checks and powers and everything to stop that idea of what economic, social, or other impacts they want to vote for and put into play. This affected the Treasury just in the last 2 days, and it also affected, of course, the mortgage rates. They've started to move back up. As I mentioned, it's not huge, but it's starting to be noticeable now, and it's expected to keep going up. We may see a change in interest rates. I can't comment on that the way that the market is right now. I don't think the current Fed or the new Fed is going to want to do that, but we may see a shift in interest rates. We're expecting by the end of 2021 that what we just showed earlier in the presentation, Alberto, with the average implied volatility where it was at 0.97, and also coming into earnings, but the average implied volatility of 0.97 and the average historical 50-day volatility on stocks at 0.53 in that case. We're expecting by the end of 2021, maybe not this time next year, that was being this time in the forward year, but maybe around September, October, November. I know it's a long ways away, of course, but you're going to expect to see those numbers to drop. Okay. As more vaccines come out and hopefully things start getting under control a little bit better. I'm not trying to get political here. I'm just saying in general, we want everyone to be healthy. Okay. Healthy drives the market. We want to see that. And in that case, but as we get back to that and the market is feeling more confident and more comfortable, not more confident that we're going to see the rise in Tesla that we've just seen in the past 6 months. We're going to see movements in Apple that we've seen in the last week, but more confident in a stable market. Market loves stability, and stability can be boring. Stability can cut down premium. Expect the implied volatilities to come back down. Expect the stock volatilities to come back down. Expect to go back to market conditions we might have seen in 2016 and 2017 before things started getting jumpy in 2018 with the trade wars. And then things got what they did in 2020 with the coronavirus. 2019 was pretty decent too. It was lower volatility at that time as well. But that's an expect to see. Stuart helps us out here, and he says it does feel like there was a lot of short covering, many expecting the market to drop with Dems in control. Maybe, maybe not. It didn't initially do that, but you're right. Now that it's all three, it might be a little bit different, Stuart. And an effect that this might have, Stuart mentions, is that consumer staples are going to get hammered as the rates rise, and that's a potential too. That's what we have to take into account. Okay, Stuart, I don't really give direct thoughts on these kind of sectors, industries, or anything else, but it kind of does lead into William's question. I apologize. He had said there, Stuart had said, any thoughts on gold? And William says, you mentioned that staples would be hurt with rising interest rates. Do you also expect XLU and XLRE stocks to also be hurt with rising interest rates? I'm not sure. It's tough. It is a tough question. Why? Because with the interest rates, you're going to start to if we start to see the rising interest rates as we're seeing with the mortgage rates and things of that nature, with what the Fed does and what we've talked about already, there may not be a new money flock to the standards, but we do know that old money, older investors have been trading for years and years. When they see certain things like that, they're probably going to stop moving out of these sort of rocket ship securities that have been doing fantastic and going to their safe havens, dividend paying stocks, gold, silver, and mining. It's a possibility. Interest rates are going to affect those, but it's more of a safe haven. That's the way old money thinks, isn't it? That was the standard. When the market was looking tumultuous or starting to go down, they would move from stocks into gold and vice versa. And it's not to say that it's the best answer, but it's a common answer when asked. What is the new money going to do? Are they going to move out of these higher, high-flying tech stocks and look for more stable dividend-paying stocks if things start to settle, decline? It's hard to say. It's really hard to say. But yes, you expect it to be affected. Absolutely. You expect it to be affected if we start seeing the interest rates changing. People are going to feel more pain, as you mentioned, so we're going to start seeing more I'm sorry, we're going to start seeing those consumer staples increasing in price. people who are already hurting are probably going to be hurting more until maybe towards the end of this year. So it's going to be tough to see in that case. So that's sort of what the idea is there as well. All right, Robert, one last one. How do I set up my naked put list to show at the money strikes as well as OTM, but not ITM? Okay, pretty simple. I'd use the percentage in this case. Okay, so there's not a lot here. Let me go back to a default, monthly picks of the day. No, I'm sorry. Let's clear the settings, Robert. Let's do that. Let's look out to February. Standard expiration. I'm going to want a 3% naked yield. We're going to put in just some base criteria here. I'm going to ignore the in the money, out of the money range for the moment, Robert. Things I would normally look for other than that. What do I want? 7% to break even. No, we're going to worry about time value, volume, open interest. All right, let's put in my stock filters now. I'm going to put in a couple technicals. Stock above SMA 20. A lot of them are doing that right now, as we just discussed. MACD crossover 2. And some real basic stuff. Let's keep the list small, though. 10 to 300 stock price. This is not direct recommendations or suggestions. It's very close to the default searches. I'm just leaving off that as well. Oh, and no earnings between now and expiration. That's why that other list was so low, I bet. Right. 144 results. Good start point. We're going to see ones that are hopefully in the money. Yeah, here's Fulgent, 63, selling a 65 put. Here's Fulgent again, 63 with a 62.5 put. So how do I just see at the money strikes as well as OTM, but not ITM? Two ways. Use the percent out of the money filter, 0 to blank. 0's at the money. Okay, that should give you some ones that are directly at the money in that case. 2087 to 20, pretty close. 1025 to 10, pretty close. 20. Here's the 17.5. So you're seeing the 20 and the 17.5 for Arena Solar. Not that these are coming up in your list, Robert, I understand. These are just the basic searches. So that's the way I would do it. That's one way. Percent out money, just 0 to blank. Nothing in the money field, not using number of strikes, just use percentage 0 to blank. Only seeing out of the money and at the money. Okay? Anything that's 0% at the money or further out of the money. You could also use the delta, of course, because you want to see deltas essentially around 0.49 or 0.5 or less. You have to think backwards. It sucks, but we have to think backwards. So I'd look for a delta of minus 0.51 greater than minus 0.51. Why? Because they're puts. They have a negative delta, and technically -3 is a greater numeric value than being down 5. Being down 3 greater than being down 5. So we'd look for a delta in the put screen of greater than 0.51. And we see the same result. So that's giving me at and out of the money only, no in the money positions. Do that for all the searches, except for in calls. If I was doing a call search, a covered call screen, just use the out of the money, 0 to blank, or you'd use a delta of less than 0.51, for example, in that case. We don't have to think in the reverse with the negative delta aspect. Simple as pie. Great question, but a little confusing when we get into the negative put deltas, but that's the easiest way. Just use one filter, percent out of money, 0 to blank. Or if you just wanted to see your in covered calls, you want to do in the money or at the money covered calls, you don't want to see any out of the money, you just reverse it. Percent in money, 0 to blank. All set. Okay. All right, well, ladies and gentlemen, here we are at 5:52 p.m. Eastern Time. Another 22 minutes of great discussion. After we said we saw no more questions that came in, we covered questions on Kip, some for Stuart. We covered a little bit more for William there. Talked about some gold and talked about some search settings there as well. Just wanted to remind everyone, of course, that today's material are my thoughts and your questions, designed for educational purposes, increasing investing performance and options knowledge. Any stocks or options discussed today should not be taken as direct recommendations or direct trading suggestions. I've given my thoughts on what I might do on my trades. I gave the thoughts on what Bill should consider with managing Hologics, but we didn't give any direct trading advice. Options, of course, do involve risk, may not be suitable for all investors. And by direct trading advice, I mean direct advice on a particular stock, option, or ETF. Today, we had a chance to look at the search tool. Earlier for Chuck, excuse me, we got a chance to look at some of the screenshots of the historical backtesting tools when you save a search. We looked at the portfolio tools a little bit as well, and the custom spread tool. Well, if these tools look like they're going to help your options trading, remember you can take a 14-day free trial to PowerOptions at any time. All you need is first name, last name, and email address. No credit card is required. You'll have full access to the site, to the search, research tools, portfolio tools, archive webinars, and much more. 14 days, no credit card required. After that, the subscription level starts at just $45 per month. You can cancel at any time. We offer different levels of service based on the data. So the $45 is the end of day data. We do offer a delayed service, which is $65 per month. Of course, there's also real-time and full access to the historical tools. Free coaching sessions are available on all subscription levels. You can upgrade at any time also. And of course, subscribers have full access to the webinar archives. As always, we have links for free education. The free webinar site is a public page. Go to powerop.com/webinars.asp. But if you're just going there as a public page, you'll see most of the webinars, but the top 5 or 6 and some of the things such as the option strategies, the options concepts, the more recent webinars will not be available to you. Those are available to subscribers only. But all of our videos are posted also in public on YouTube. So you can just go to PowerOptions, go to the YouTube channel there, and you'll be able to see the various archive presentations. You can search on YouTube by title if you wanted to look for covered calls, poor man's covered calls, diagonal spreads. You'll be able to catch all the webinars that we have there as well for those strategies, those discussions. Of course, if you think of other questions later on, just send us an email at any time, support@powerop.com, or of course, support@radioactivetrading.com. You can also call us during market hours at 302-992-7971. Trial members and subscribers, of course, schedule one of those coaching sessions at any time. It's essentially a 35 to 45-minute phone conversation with myself or Ernie. And we'll walk you through the tools on the site as we kind of just did and answer any questions that you have, or start from scratch if you're just beginning also as well. Well, William, it says Happy New Year to you and your family. Happy New Year to all of you as well. All the best for 2021. We'll still be here, of course, every Friday and on other days to further educate and to learn ourselves as we go forward. Thank you, Stuart, for your questions today, and thank you for joining us. Kip, thanks again for your questions related to the trades and what we're planning, and you'll see more on that. Blueprint owners and Fusion subscribers will see more on that next week, as well as all of you will see more on that next week as we start to discuss a little bit on the market sentiment tool. Chuck, you stay safe, stay healthy. Hopefully your presentation goes well. I hope it goes well. Stuart, thank you again. You have a great weekend also. Take care, ladies and gentlemen. We'll see you soon. We have recorded the presentation, of course. We'll start cropping that up in the various pieces and get those posted to you soon. Take care, everyone. Good night.